Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me, my colleague Nigel. This was a Nigel, hi. Friday, right? Thank God it's Friday.
Wow.
And let's hopefully end this on a high, a new high for the Nifty. Although it doesn't look like that this morning, but let's see, it's possible. The sensex made a new high, so it's natural we wait for the Nifty to do the same.
Well, that's right, Prashant. Morning, and it's a great morning to wake up to, right? Because we're within kissing distance of those fresh all-time highs. So we've started that journey out there, and it's a Friday, so can't wait for the end of today. But it doesn't feel like, we are at all highs because there are a lot of those mid-cap stocks that have underperformed. A lot of the stocks have come off the peak as well. But tell us, how is trade set up?
I mean, just a quick thing. So U.S. markets, of course, were shut for holiday, and so there's no real cues from there. You've got US futures, which were higher, but they're flattish now. I mean, the gains have been given back. The Sensex hit a new high. And of course, I mean, the Nifty is just about 0.4% away from a new all-time high. So that's basically the setup. Let me just quickly tell you, how things are looking. And this is, I'm going to start with the Sensex, right? So the Sensex made a new high yesterday. All-time high, which is basically it's reclaimed the previous high, which was made in October of 2021. The graphics will come up on your screen, and I was looking at the global comparison. The only market which has done better than India year to date is the Brazilian market. The Brazilian market is better, but it's 1/4 the size of the Indian market, right? So while we can say that there is perhaps this one market which has done better, but it doesn't count because the sheer size of the market is much smaller. Now to the kind of sobering statistics, and this is the point. Only 23 of the Nifty 50 stocks, even though the Nifty is at just 0.5% away from all-time highs, only 23 of the 50 Nifty stocks are above their October 2021 levels, right? And the same for the Sensex. Only 13 of the 30 Sensex stocks are above the October 2021 levels, which means about 60% of the Nifty and Sensex constituents, respectively, are below their levels where, the Nifty and the Sensex got to last year. So that is telling. And that is the reason why I guess one doesn't feel that enthusiasm, because although markets are at new highs, portfolios perhaps are still lagging. And you can do the same exercise for mid-caps, small caps, etc. And I think you'd reach the same kind of conclusion. Just a few names really out there which tell you the story. As I said, only 46% of stocks are above the October 21 levels, and these are the rank outperformers. You've got Adani Enterprises, ITC, Mahindra, Eicher Motors, Coal India, State Bank of India, ICICI Bank, and a few others. But this is basically the list which is done the best compared to the last time the index was at these levels. And the laggards are, of course, technology names. Now, not all these stocks made their respective highs same time last year, but for the sake of consistency and comparison, we've taken the last time the index hit a high. Wipro, Divi, Tech Mahindra, BPCL are some of the names which are big laggards. So, will it be a case where the index makes a high and then it kind of pulls the rest of the market up, the broader market, etc.? That's the ideal situation. So we'll see. For now, the SGX is indicating a slightly lower start by about 0.25% or so. Now, what are you watching?
Well, what a fantastic close we had to the November series, right? The bulls went home with all the gains. The call writers got stuck on the wrong side. And once we crossed that 18,430, that was the mark that we highlighted yesterday, that once that mark gets crossed out, well, we'll see a quick 50, 80-point rally. In fact, and that's precisely what's happened in the last 30 minutes or so. So the upward trend is your friend, and I think you'll have to stick to that for now. The broader market underperformance, though, that's a little bit worrying, or that's, giving you some bit of nervousness. Let's see whether or not that catches up. But for now, that's lagging. Yesterday, the good point also was, besides it being expiry and had a good close, you had the FI money that was back. They bought after close on 4 sessions. And you look at both those two data points together. The FI is bought after staying out. The previous 4 sessions, they were net sellers to the tune of close to 950 crores. So they turned around a little bit. Institutional flows, since we look at it together, they bought yesterday close to around 1,000 crores. The previous sessions, the DI and the FI number together, well, the institutions were actually net sellers. Now, if you're looking at a couple of other data points, well, take a look at the long exposure. At the start of the December series, well, it's a contrast to what we saw at the start of the October series. But you can't really derive anything in terms of a return, because in October, they were net short. You had only 13% of the positions on the long side and you had a good series. In the November series, they were net long. And in fact, you still had a good series. And this time, they're overtly net long on the index. More than 75% of their positionings are on the long side. But the ones that are getting it right are the client side, right? And we've been tracking that for the last couple of series. So this time around, they're not that net long on the index. Previous two series at the start of it, they were around 60%, around 65% net long. Now they're only around 51% net long. So let's see, whether it's softer positioning getting into the holiday series. But for the time being, that's the data point we have. On the option side, 18,300, 18,000 put as well as 18,300 call. They have the highest open interest out there. But there's aggressive writing that we're seeing. 18,300 put, 18,400 put, between them. Close to around 80 lakh shares have been added. So you're fine. Maybe you'll get a bit of a pullback, 18,250 to 18,300. That's the near-term support. And you need to stay long on this index. But you need to brace yourself for maybe a couple of 100 points pullback. And maybe the SGX will be suggesting some bit of a pullback. Let's see whether or not that happens. But the point that Prashant made as well, you'd like the mid-cap index to perform because in the month of November, no worries in terms of the large caps. The Nifty and the Nifty Bank are doing well, but the broader market performance is lagging yet again. So let's see whether or not it can catch up, Prashant.
Absolutely, and I think we need for that space to do better and for that to start to participate. You want a broader market rally, not a narrower one. Now, some calls which are coming through. This is Neelkant Mishra of Credit Suisse, who says that the recent bounce takes Nifty closer to its all-time high, but he finds that much of the performance over the last 12 months has been driven by an increase in 12-month forward earnings per share, offsetting the sharp decline in global P ratios. Therefore, he believes time correction is underway. India's P premium to the world and other emerging markets is already at an all-time high and is unlikely to expand from here. Financials and cement remain his preferred sectors.
Well, let's get you some money market views on the rupee. Bhaskar Panda of HDFC Bank says that the latest US Fed minutes indicate that the future rate hikes can come in smaller packets as inflation cools down. This has an impact on the US yields, which moved down and pulled the dollar index lower as well. Oil has also remained subdued. Given this sort of a backdrop, the USD INR may take heart and remain range-bound today with a little bit of rupee appreciation bias. According to him, the rupee will be in that range of around 81 rupees 55 paise to around 81 rupees 75 paise. A tight one there.
Well, on bonds, we've got Bhaskar Panda, who says that the Indian 10-year benchmark yield has cooled down due to global factors and is expected to remain range-bound. He expects the yield to trade in a range between 7.25 and 7.3%. All right, we've lots of stock-specific action to track today. We'll just get to all of that in just a bit in our special Top 10 segment. We're looking at names like Axis Bank, All Cargo Logistics, Punjab National Bank, ITDC, PB Fintech, and Adani Enterprises. That's on our radar on the back of positive news flow. Lupin is the only stock that is likely, in terms of news flow, which perhaps starts weaker. All right, we have our, and we'll get to all those stocks in a bit. Rajat Bhattacharya is joining us now. He's Senior Investment Strategist at Standard Chartered. Rajat, great to have you with us here. Good morning. Thanks very much. How are things set up, Rajat? You know, the market here, of course, is the benchmark, the oldest index, the Sensex 30 made a new high. And I guess we'll wait for the Nifty to do the same, which is the more widely tracked now. Globally, how are things looking? Is the global setup supportive of continued rally, or you think it provides more speed bumps and roadblocks?
Yeah, Prashant, I think the global rally is now close to the tops for this. We've been talking about this bear market rally for a while, and I think it is now time to fade that global equity market rally. Now, that means the US, the Europeans, they've shot up significantly, right, over the last 1 month. But there are signs now they're hitting close to those resistance levels, like for the S&P 500, they're close to the 200 DMA, from where they've pulled back twice this year. Similarly, in the Euro Stocks 50, I think that they are heading towards that April high. So they are peaking, I think, now. The overall thing is that we just went through our own team, debate, the annual debate. And we have some news in the sense that we now have greater conviction that the dollar has peaked, the US Treasury yields have peaked in the cycle. So whatever we saw earlier this month is probably going to be the top in the cycle, which is good news for emerging markets, so which is good news for Asia. So the conclusion being that it's time to fade the rally, equity rally in the West, and probably add your exposure towards emerging markets and especially Asia ex Japan.
Hi, Rajat. Morning. Tilting towards emerging markets for a bit of a good close to the year. That'll be fantastic news for the bullish sentiment here in India. But, I recall a couple of times you have mentioned that from the Fed, you're working with a 50 basis point increase in the month of December. Some part of the markets were expecting a 75 basis point. Have you changed your view out there, or 50 basis points, you won't be surprised, right?
No. So that's factored in. You're right, Nigel, that we're still expecting 50 basis points in December and probably another 50 basis points in the first half of next year. So that might slow to another a couple of 25 basis point hikes in the new year. But that's about it. So the market is priced. The terminal rate, if if you watch that, is around 5%. So we are almost there. And the markets, as I mentioned, the treasury yield market has priced that in already, which means the dollar is also has priced that in. There is a chance, I must add, that the dollar, broad dollar is facing support here after the pullback. So there is scope for a near-term bounce in the dollar. So near-term pullback in euro dollar, for instance. But the big dollar call, which is the longer-term call, 12-month call, we've probably seen the peak on that.
Okay, Rajat, the other thing is China, right? Which directionally seems to reopen, but I guess cases are spiking, so they are putting restrictions again. But broadly, and that is important for oil and metals, etc., metal prices for both these commodity sets. What's your sense? Direction is clear, reopen, or you think there are doubts once again?
Yeah, they did reopen, Prashant, and we saw a lot of the municipal governments, the local governments open only to see that spike again. So we were cautious about the pace of reopening. We have always said that, probably the biggest reopening will happen after spring, after the winter season's over. And these surge in COVID cases, now they're at a record high in China now, means that is more the case. It's going to be gradual. But our bigger, surprise has been how policymakers have accelerated the pace of easing in property sector measures. They are probably going to cut RRR rates, so the reserve requirements for banks. The State Council, the Cabinet has already kind of approved that, and we are waiting for the PBOC to cut RRR anytime now. Now that follows the other measures that we've talked about earlier, which eases the rules for property developers. They're targeting more financing this week. More commercial banks have eased liquidity for property developers. All those are signs of a bottoming process. We've seen the sharp run-up in China's stocks. And if the dollar peaks, the broad dollar peaks globally, that's going to be another big support for China, and that means the other risk assets, as you talked about. So we've seen Aussie dollar pick up. We've seen the run-up in some of the base metals. Base metals, we are more cautious because of the global recession worries, the Western recession, right? We are probably going to see a recession in the US and Europe early next year. And that means that there is a cap to the base metals, so to speak. But overarching view is that it's time for stocks, equities to benefit in Asia and also the Asia dollar bonds market.
Okay. All right. Rajat, what about the toss-up between India and China? It's getting tricky right now. I mean, we are the outperformers, mind you, and we have shown that, perfect form in 2022. The only point is everything comes at a price. Has China come to that price where you prefer that in comparison to India?
Between China and India, as we've maintained, we still like India in terms of the longer-term trajectory, right? So the growth is there, EPS growth is there, but China has the value factor. So, China stocks have run up from very low levels. The valuation is still rock bottom, 8, 9 P, depending on the index you look at. Now that is way below long-term averages, even if you put a discount to global equities valuations in China. So China, I would say that the right strategy would be don't give, you wouldn't sell India, right? So you hold on and probably add averaging into India, but diversify. Asia, the broader Asia markets, so, Korea was beaten down, Taiwan was beaten down, Southeast Asians were beaten down, China was extremely beaten down. So the prudent course would be going forward to diversify across Asian equity markets.
All right, Rajat, we'll leave it there. Thank you very much for joining us. Great speaking with you. This China question is an interesting one. I was speaking with someone yesterday who said that investing in China is like a top-down call. It's not about specific stocks anymore, and that call has to be made not at a fund manager level, but chief investment officer or higher ups, because it's a call about the country, it's a call about politics, it's a call about, since the largest funds are all US based, your own government's attitude towards China. They're seriously trying to restrict China's influence.
And that's what India's gaining.
And India's gaining. And amidst all of that, for funds to take a call that we're going to go big on China, however cheap stocks may be, that's just not going to happen. Unless it's a top-down kind of a call, a bigger call.
Prashant, the other point is the crypto world. We were wondering whether it will have a ripple effect, right? I don't know whether it's been good actually for equities ultimately, because people have realized there's no easy bucks or no big fast money. If you want to play a risky non-bond, non-fixed asset, then rather put money in equities than try any of this fancy stuff. That's because we have seen no impact whatsoever on the equity markets, and one would have thought there would be some correlation, but that's not appeared at all. So just a thought.
Especially in India, right? Because I think
brilliant stuff.
We've kind of dipped into the bulk. There were a lot of doubts when the government came down hard and stopped and everything, but I think it's now for everyone to see that it's been for the better, most definitely. We'll take a quick commercial break here. Our list of top stocks to watch lined up. So that's the conversation we'll have with our research team on the other side. Stay with us.
Welcome back. Hope you're having a good morning while you're waiting by for all the stocks that we're tracking. So our research team is standing by to run you through CNBC-TV18's top stocks for the day. Sonal Bhutra is stepping in, and she's going to cover Axis Bank and the takeaways from the analyst meet. Morning, Sonal.
Good morning, Nigel. Happy Friday to you as well. Well, as far as the Axis Bank analyst meet takeaways are concerned, the big focus, of course, was the company talking about the focus on digital, where they say that digital platform is boosting cross-sell opportunities for the bank. With the Citi and Flipkart partnership, the bank says it will be among the top credit card platforms as well. Delinquencies for them remain below the peer private bank average. This is in the retail category as per the bank. Asset quality continues to show signs of revival and improvement for the bank, and they are also talking about if there are any macro headwinds as well, they have strong provision buffer to support any of those situations as well. Jefferies has a buy with a target price of 1,110 rupees per share. They say valuation discount of 40% to ICICI Bank should narrow a bit. Capital raise will be the next thing to watch out for. UBS says that bank reiterated medium-term loan growth of 5 to 6%, which is higher than the industry. They expect valuation gap with peers to narrow down. So two of these brokerages talking about that. JP Morgan says that tech investments of late have come to the last stage, and they should start delivering in the books as well. The glide path of cost to assets is reducing by 25 basis points over the next 2 years, so that is something they'll be watching out for. Bank's ability to maintain return on assets at 1.8% will be something that they'll be watching out for as well.
All right, Sonal, thank you very much for that. So that's something to watch out for. Lupin is the next one we're going to talk about. Ekta is here to tell us why that is perhaps the only one on our stock list with our researchers today, which perhaps opens in the red. Ekta, over to you.
Well, yes, the US FDA negative news continues. Yesterday, we spoke about Glenmark as well as Ciplan. Today, it is Lupin's Mandideep facility, the Unit 1, which was inspected by the US FDA, issued 8 observations each for their drug product facility as well as their API facility. It was inspected from the 14th of November to the 23rd of November. Company says they do not believe it will have an impact on disruption of supplies or existing revenue from the operations of the facility. But nonetheless, this particular plant has already had issues in the past from the US FDA. And, based on the fact that they've received a total of 16 observations, it's probably likely to continue. And we could probably see some red on the screen.
Okay, all right, Ekta, thanks for that. Well, Mangalam joins in to tell us about all cargo logistics. Mangalam, morning.
Good morning. So yes, last week itself, All Cargo Logistics joined us here, and they said that they're looking for partnerships, but not any significant acquisition, and that's exactly what they've gone ahead and done. They've acquired 75% stake in Fairtrade GmbH, which is a German logistics company, for about 102 odd Indian rupees, 102 odd crore Indian rupees. They said that this is to expand their business in an important market, which is the German market. This entity had about 374 crore rupees worth revenue in CY21. So important to see what the kind of margins, etc., would be for them and where they would, scale it up. But remember earlier as well, All Cargo Logistics has been making these partnerships and acquisitions. They acquired Speedy Multimodes for about 102 odd crores, as well as a joint venture with Nordicon Group to enter the Nordic region for about 210 odd crore as well. So this is a step in that direction. See it positively.
All right, Mangalam, thanks very much for that. More stocks with news flow. Vahishta is standing by with that list. Vahishta, hi, good morning. All right.
All right, Vaisa, we'll just come back to you in just a bit. For the time being, I think we'll hop across to Vivek. He's standing by. He's tracking a few stocks and news. Morning, Vivek.
Well, good morning. Quite a bit of fund action in yesterday's trading session, and you'll actually expect to see quite a bit of continued action. First on my list is PB Fintech. After all of the regulatory rules yesterday, you actually saw some significant block deals happening there. So WF Asian Smaller Companies Fund bought both in NSE as well as BSE. 33.5 lakhs on BSE and 34.2 lakhs as far as the NSE is concerned. Fino Payments Bank, yesterday we highlighted about how Capri Global Holdings had bought a significant chunk, a little over 1%. They hiked their stake further in yesterday's, block action as well. So expect to see some further up. Remember, day first day stock was at upper circuit. Yesterday up significantly as well. At this point of time, they continue to hold that it is just, an investment as far as Capri Global is concerned. But, we'll continue to track the action in this particular phase. IEX today, the board meet for buyback, the quantum and the price will be something to keep an eye out for. And Adani Enterprises, keep an eye out for this stock as well. The board meet is there today to consider the proposal for fundraising. It will be important to see the quantum of fundraising and the route they choose to go as far as this particular fundraise is concerned.
Okay, all right. Thanks for that, Vivek. Well, Vahista is back with us. Vahista, I think now you're perfectly mic'd up. Tell us, what are you tracking?
Well, I'm looking at Punjab National Bank, which has received an approval of DIPAM for the divestment of stake in UTI Asset Management Company. This comes to approximately 1,300 crores. And PNB currently holds 15.2% stake in UTI AMC, and the objective is to realize a gain on their investments. Moving on to KIOCL, some positive news. The operations of their pellet plant at Mangalore have restarted yesterday. The last is Indian Tourism Development Corporation, wherein the government fixes 7,400 crores as indicative value for the Ashoka Hotel, which is among the 8 ITDC assets listed under the National Monetization Pipeline, which was announced by the Finance Minister last year. The Ashoka Hotel monetization will take place through the public-private partnership mode. Back to you.
Okay, thanks for that, Vaista. Well, so let's run you through all the top stocks that we're tracking for y'all early this morning. Stocks with positive news flow. That's bulk of them. Axis Bank, All Cargo Logistics, Punjab National Bank, KIOCL, ITDC, PB Fintech, Fino Payments Bank, Adani Enterprises, and IEX. Well, there's just one stock we're expecting with a bit of a negative news flow. That's Lupin.
Okay, so lots to watch, and we'll track them as the markets open. But Manisha is now joining in to run us through what's top of mind as far as commodities go. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with crude, where we are headed for a weekly decline and a very sharp one at that, trading at a 2-month lows for the crude oil prices. Some consolidation in the Asian markets right now, but it really is going to be about the European Union governments, which are resuming talks on Russian caps today, so more development or direction would come in from that. In the meanwhile, the metal prices seem to be stabilizing. We have seen strength come back here. Iron ore is trading at an 8-week high. Steel is trading at a 1-month high. A smart rebound in the copper prices also, as there are various reports suggesting that it's not just going to be about China, but US and European Union electrification demand. That would be a key driver as well. And with the kind of deficit that we are working with for zinc, copper, aluminum, some of these metals have continued to gain up today as well. And then there is a Goldman Sachs report saying that they are bullish commodities, and from mid of 2023 is when they expect the commodity prices to start to rebound.
All right, Manisha, thank you very much for that. We'll take a quick break here. We are going to come back. Aditya Suresh, Head of India Research and Strategy at Macquarie, will be joining us for some discussion on market levels, sectors, and stock bets as well. We're back with Aditya in just a bit.
Welcome back. Well, the Finance Ministry has recently set up a committee under former SEBI chairman, Mr. Damodaran, to look at ways to scale up PE and VC investments into India. This also comes at a time when we're seeing large-scale layoffs across startups in the country. Now, speaking to CNBC-TV18 exclusively at the launch of industry body FICCI's Model Risk Code, former SEBI chairman, Mr. Damodaran spoke about ways to scale up PE and VC investments into India, lessons from layoffs in startups, and regulatory changes needed for the ease of doing business. Let's hear him out.
I think the model risk code is relevant for everyone who's doing business, because it is size neutral. Risk is a size neutral problem. Everyone has risks. And if you recognize that early enough and put in place steps to address it, the company will be better off, the individuals will be better off. So it's relevant for everyone, whether it's a startup or a 100-year-old company, equally relevant.
Right. Just to also ask you about the need for greater parity, greater rationality when it comes to taxation on domestic capital. This has been a demand of many PE, VC investors from startups as well. How do you see this?
Well, we have received as a committee representations from 4 sets of people. They made presentations to us. This has been one of their asks. As to what my thoughts are, I will hold them back for another month or so till we have the report out, because we are in this discussion stage. We've got inputs from a large number of people. The committee itself has considerable expertise drawn from various sources. And we're looking at all of this. Our objective is to see how to make life a little easier for people that are actually investing in India. Therefore, I don't want to get into the specifics, but this is certainly one of the asks that the committee has received and is addressing.
By when do you think you'll be able to be ready with your report?
Our target date is the 9th of December. We are hoping we will make it by that time. We have had several rounds of discussions among the committee members. And now we are just putting it all together in terms of what we can recommend, what we cannot recommend, because everyone has given us long lists of demands saying that India would be a much better investment destination if all of this was done. At the same time, there are some regulations that are in place for a certain reason. And it's not without reason that regulations or laws got written. So we have to see whether that rationale still holds. Even if that holds, is there a slightly lighter touch way to do it rather than keep it in its existing form? So these are the possibilities that we're addressing.
Right. Looking at ease of doing business, this has been a big priority for this government. If we were to ask you about 2 measures that the government can take to make it easier for companies to invest in the startup ecosystem, make the investment climate more friendly, make India a more receptive place for investments, what could that be?
No, I think certainly you got to look at all the existing regulations and laws and see whether there are any among them that are past their sell-by date, have lost relevance, because you write laws and regulations in a context. Has the context changed? And of course, at the back of all of this, we got to keep in mind the fact that India needs to see a lot of investment coming from outside of India. So how are you going to make it a little easier? That's exactly what we are addressing.
Right.
All right, that is the former SEBI chairman, Mr. Damodaran. Always interesting to listen to him. Aditya Suresh is now joining us. He's head of India Research and Strategy at Macquarie. Aditya, great to have you with us here. Thanks very much for your time. Prashant this side. You know, we are back at new highs. But Aditya, I just wanted to ask you, what is client feedback from global investors like? I mean, you'd have constant back and forth about ideas, about you telling them what they should be doing and kind of pushback. It was interested in, is there the same level of bullishness amongst global investors for India as there is amongst retail local investors?
Prashant, thank you for having me on the show. So I think the key observation is just that there is this big dichotomy again, right? Which is that you do have a lot of a lot of investors very concerned about valuations, right? Where India's valuation premium is at. But in the same token, you do have another set of investors who are looking at India on, say, 3, 4, 5 year kind of time horizon, right? And therefore, they'll be kind of looking into the pullback. So it is, I don't think there's a consistent theme or message, but I think there's a general acknowledgement that, let's say, over the next, say, 6, 12 months, that perhaps in a relative sense in emerging markets, we do underperform some of the other kind of other markets here, just given the fact that where valuations are at.
Hi, Aditya. Morning. I will get to your anti-consensus call that you took on IT the last time around, and that worked pretty well. IT has come back in style. But let's focus on the earnings first. The past quarter's, earnings numbers we have. I believe some part of the street is still a little bit cautious that we're not going to get that 15-16% that earlier we thought for the next 2 years is a given. What are you factoring in terms of earnings growth? Because ultimately, earnings is going to drive this market higher.
No, absolutely, Nigel. So I think when I said plus 15%, plus 16%, that's in the MSCI India.
Okay.
And that's a rolling 2 year forward basis. We still maintain those estimates. And there are kind of, in my opinion, good reasons for that. Where, for example, in financials, the expectation is high, and we've actually been revising numbers upward. With IT, some of the cuts to margin that's already in the base, is our opinion. Consumer, again, similar kind of theme. So there are quite a few underlying support factors where at least the optics of this is going to support that 15% growth from an MSCI India perspective. From a Nifty perspective, I think there the growth is going to be more like, say, 10% thereabouts. So there is a disconnect in terms of Nifty versus MSCI India, where MSCI India, the growth is a bit higher than just in terms of the underlying constituents as well, right? But the key theme is that, so when you think about earnings growth in a relative emerging markets context, we're looking at plus 15 still, even after these set of results. In that setup, EM is at plus 5, world is at plus 6. So this entire growth outperformance message, I think, still continues to be maintained. The only kind of challenge for India is that it's now in the base, right? So it's already in expectations. So incrementally, I don't see us rallying from here on the back of this earnings growth, right? So when you think about plotting, let's say, MSCI India versus 2 year forward earnings expectations, there's a very, very strong correlation over the past 20 years, right? And to the extent that that regression holds, then the key theme would be to take away that there's a bit of, we're probably overbought here a little bit, right? So we do see some pullback here on MSCI on the back of that. But yeah, 15% growth is still a fairly strong number.
Aditya, but high valuations rarely ever cause sharp corrections. You need a trigger for that, right? So what it can do is just cause time correction, prolong how long market sort of stays sideways, right?
No, absolutely, Prashant. So I think one of the main themes which we speak about as well is that when you think about India's valuation premium, okay, yes, we're at 19 times 2 year forward on the MSCI India, and that's at a plus 3 standard deviation premium on the premium to EM and kind of the world. But are we saying that on its own is a factor which is going to therefore lead to a kind of multiple compression? We're not, right? So I think there are India-specific factors which kind of supports the multiple where it is at. So we're not saying that valuation on its own is going to be a negative here for India from a kind of derating perspective. I think that premium to EM kind of compresses more about what happens to China, what happens to Korea, what happens to Taiwan, that type of stuff. Right? I think the one specific factor which at least I'm concerned about is that if I take the story here over the next, say, 12, 18 months, what happens to kind of domestic liquidity in the face of kind of high fixed deposit rates, right? So I think the key piece over the past, say, couple of years has been that at least as a team, we've had foreign selling, but domestic kind of support, right? And at least the way we think about it is that it's a bit of the reverse of that going into the next 12 months, where at the margin, we do expect kind of some foreign buying, but at the margin, we do think that domestic the liquidity, which has been ample so far, that kind of recedes here in the face of kind of high fixed deposit rates.
Well, Aditya, the IT space surprised everyone. Just when everyone was throwing in the towel, I think from the end of September, that's been one of the big outperformers. You all had an anti-consensus call, I think, on being positive on IT, as the earnings cuts, according to you all, were already in the price. What's your take on it? Will you stick to the large cap IT names, or do you believe some of these mid cap IT names as well, post the correction, they offer value, or are they still far too expensive?
No, we're still sticking with the large cap IT names. I would still say that our view is, again, premised on the fact that we think that the peak attrition is kind of behind us. The margin cuts are already in the base. I think fiscal 24 margins gets kind of revised upward. I think offsetting that, we're still concerned. But we're still concerned about kind of the revenue growth which is kind of baked in numbers. So it's not kind of set in stone. But given the valuations are at, I think that's kind of, in our opinion, is adequately kind of captured, right? And so if I kind of think about some of these large caps are trading at, say, 15 times, 20 times, that 25% kind of ROE outlook with still strong free cash flows. On that basis, we do get constructive. It's still not a completely de-risked trade, if I may, though. We're still positive in the space. It's still one of our biggest anti-consensus kind of positions from an India perspective. But I think there's still challenges to work through. It's reflected in multiple.
Okay, challenges to work through, but in showing up in multiples. Aditya, which are any new themes you've initiated coverage on? Has the market forced you to do so? I mean, defense, for example, there are some of these, railway stocks. I mean, I know these are more cyclical and they fade in and out. So maybe leave rail aside, that segment aside, but defense is perhaps here to stay with a strong push. And the biggest buyer is the government of India, and they want to buy more from Indian companies, right? So are you getting interest from foreign clients for this sector, coverage, initiation, etc.?
So I can't speak about coverage, and this is a space which we don't cover as we speak. But in terms of interest, that's clearly where the interest is at, right? So like in terms of, again, taking that 3-5 year kind of perspective, a lot of this kind of localization theme and kind of the small mid-cap ideas within that is kind of where a lot of the interest is at. So I would say that first is the theme itself, I think, makes a lot of sense. And I think there is a structural kind of undertone to that. And it is kind of something which, yeah, I think people are getting behind.
Aditya, I think you had a view on the OMCs, right? What's your take? We have crude oil prices that have corrected quite a bit as well. What's your fresh call? I think you had a buy on all three OMCs.
So we still have a buy on all three OMCs, but that's clearly a tactical position, Nigel. It's I think it's hard to get fundamentally bullish on these OMCs, just given the volatility of earnings, right? So for these to be fundamental kind of calls, it's got to be more backed by a more stable path in earnings, and we're not there as yet. Within that entire kind of energy space, I think the gas names look far more interesting. Some of the midstream gas names. So we do have quite a few kind of, let's say, a few ideas there where I think stocks say double on next couple of years.
Okay.
But a lot of it is again, it ties back to what's in the price, and like some of these stocks at 4 times, 5 times PE, with I think a dividend angle to kind of think about, and the thematic is there to support as well. So current environment is still challenging given where LNG prices are at. But if you take an incremental call for the next 12, 18 months, I think some of these things could look interesting.
The gas distribution companies?
No, this is more like the gas midstream names. So gas distribution, I think one of the challenges in that space is still about you still need to take on incremental kind of price hikes, right? And you're already kind of at peak kind of prices. And so we're still concerned about kind of the fact that you're sitting at peak margins. Volume growth is kind of subdued in this high price environment. And so even if I had to take a tactical position that, what's the gas price locally are cool, and therefore there could be a trade on city gas distributors, fundamentally on that 1 to 2 year kind of time horizon, it's a bit more challenging to kind of do that unless you have a strong volume growth outlook, which I think I'm finding it a bit challenging to kind of make the case there, given where prices are at. So the midstream names, I think there's a lot more value than the downstream.
Okay, all right. Where else, Aditya? What else is sort of catching your eye, and kind of where are you more bullish on, earnings led?
Yeah, so I think coming back to that anchor position of say plus 15% 3 or 4 EPS growth on MSCI India, right? So I think the key theme is about high expectations and financials on earnings, and that being that's being revised upward, right? I would still say that financials is a super consensus kind of position. And therefore that it's a crowded trade, and that makes me a bit nervous. But in terms of earnings growth in itself, I think financials is well positioned as a space which we like. That's one. We touched on IT, where we have an anti-consensus kind of positive. The other area which I think is interesting is on industrials, where the key theme which you're speaking about is just the fact that when you look at the state of government revenues and kind of expenditures, yes, we're still looking at a very large deficit that's not to be ignored. But compared to where we were marked at, revenue is kind of tracking above expectations. And that's been a broad basing of the kind of tax base. And that's kind of been helped really by your formalization kind of themes. And that therefore is allowing the government to kind of spend higher on capex, right? Which has been above at least our expectations. And so when I think about these kind of industrial companies and the kind of backlogs which are sitting on, plus typically the execution of the backlog, you'll see that margin expansion kind of story coming about as well. So industrials is an area we like. Everywhere else is a bit more bottom up. Consumers is a space where we struggle with, at least from a top-down perspective. I think, maybe one small slice of the consumer is doing well, but whether it be urban mass or it be kind of rural, that's still kind of challenging. So consumers probably an area where we remain most cautious. Financials, like industrials, probably more constructive. Beyond that, it's more kind of selective bottom up.
All right, Aditya, I wanted to ask you about this auto trade. Besides banks, a couple of months ago, auto was the big theme. In the last 1 month or so, the index itself has done a relative underperformance out there. Tata Motors has a set of issues. If you take a look at it, the Nifty in the last 1 month is up 4.5%. The auto index is as flat as can be. What's your take on it? Because the chip shortage issues are going back. Demand is rock solid. Production is ramping up as well. And margins could improve. But how much of that is already in the price? And if you are, if you have a view on auto sellers, which segment would you like? Is it the CV space?
So again, from an auto's perspective, a lot of this, in our opinion, is so we've been positive in that space for the past, say, 12, 18 months, right? At today's levels, do we selectively like a few bottom-up ideas? We still do. It's some of these names which you were kind of alluding to in the CV space and the two-wheeler space as well. Incrementally, from a top-down kind of perspective, is this an area which I'm feeling comfortable with? Less so, right? Given that I think a lot of this kind of optimism is already kind of baked in. I am kind of still worried about where consumer sentiment is at. Again, in the medium term, that kind of is going to weigh on volumes. Is our opinion. In terms of the earnings growth in itself, a lot is already in the price, right? In terms of whether it be the new model launches, the demand kind of upcycle. With the demand upcycle, the kind of margin expansion, all of that is already in the numbers. Like, for example, EBITDA margins in that space, consensus is already kind of factored about a 300 basis point expansion in margins in the next 2 years, along with that kind of upcycle, which has already been kind of forecast. So again, is there a surprise element within autos, which therefore leads us to kind of be positioned more there? I think that trade is largely played out, Nigel, is our opinion.
All right. Aditya, the other one which has caught the attention on the downside is all these, new age themes, right? Delivery companies and the like. Sharp correction across the board. I mean, fintech. Anything looks interesting with stocks that you have coverage on here?
So we do selectively like a few stocks in that broader kind of, let's say, new economy space. For example, I think the online travel space is interesting. We have coverage of a name listed overseas. And there, I think the biggest kind of point which we make is about kind of the fact that we don't have to draw any boundary conditions. At least we don't feel we need to draw any boundary conditions on who the target audience is at. It's more of a volume play and then greater kind of online penetration, all that stuff, right? So that online travel space is interesting. That there is a theme about consolidation, potentially kind of higher kind of improved kind of take rates over the next kind of couple of years, better margins, etc. And that space is already kind of profitable, right? So that's a space which I like.
That's make my trip, I'm assuming, but that's.
So we cover Make My Trip. We cover Make My Trip. So I think that.
Anything here you want to talk about? I mean, anything, obviously under coverage?
Yeah, within our coverage, so most of these names we are cautious on, and the key theme there is on at least within names which are kind of listed here. One of the main points is about the lack of growth momentum in some of the kind of let's say food delivery space, etc. And the other theme is about just the path to profit, right? And we think that that's a bit more prolonged than where expectations are at.
All right, Aditya, we'll leave it there. Thank you very much for joining us. It's a great conversation as always. And thank you very much for making it to CNBC-TV18. Thank you. Let's just look at the SGX Nifty. I mean, it's indicating, I think, about a 25-30 odd point cut. So it's not anything substantial, anything large, but it's indicating a slightly lower open. US markets, of course, were shut. Asia is not doing anything great, anything decisive, actually. And I think that's the way to put it. Some markets are slightly down. Hang Seng, for example, is down about 1%, a full 1% now. But there are other markets which are slightly higher by about a 1/4% or so. So, one way or the other, if you're looking for directions from global markets, not very much. US futures, which were higher, they've gone absolutely flat. So almost unchanged at this point in time. We'll take that break. We are back with technical trading ideas. We'll have Srikanth and Mitesh both joining in to run us through what should you be doing with Nifty indices and, of course, stock-specific trades.
Welcome back to Bazaar Morning Call here on CNBC TV18. Well, it's a good time to tell you how to trade on the index. We have our technical experts who are back with us. Mitesh Thakkar as well as Srikanth Chavan. Good morning, gentlemen. Hope you're feeling good. Yesterday was a fantastic close to the November series. Will December spring a pleasant surprise, as been the case for the last many, many years? Mitesh, you go first. Tell us what's your call on the Nifty. Trend has been up. You can't short this index. But if we see a bit of a pullback, do you think then you should buy in, or do you think we should chase the opening?
Good morning, Nigel. I think the trend has clearly been up. Yesterday, we talked about heading towards 18,604, which was the intraday high. I think that should be done in a day or two. 18,420 was the swing pivot which the Nifty made when the rally was happening in the middle of November, which is around 15, 16, 17th of November. And then we crossed that yesterday and we continued the uptrend. So in case we get a pullback to that, people who don't have a long position, I think around 18,450 is the area to enter. Give and take 10 points here and there and keep a stop below 18,400. Having said that, 18,604, while is the pivot target, is the intraday high which the markets recorded. But the overall extension target suggests 18,750 and then eventually 19,000 plus level. So very, very positive. Any dip would be a welcome buying opportunity. Aggressive buying for people who don't have a position now, I think 18,450, 460 is the area to enter.
All right. It's well put, Mitesh. Srikanth, how would you look at things? I mean, if you get a slightly weaker kind of start, would you use that to buy?
Yeah. Good morning, Prashant. Yeah, certainly, I think we should look for adding long positions, because by crossing the very crucial level of 18,300 and 450 in one go, one thing is very clear, that now the momentum is again going to increase in the short term. Wicks are at very low. So we can expect smooth upward rally towards the levels of 18,600 or 700. So the strategy should be to look for adding long positions. I think it will open somewhere close to its previous close. But then, as Mitesh said, I think we should look for adding positions with a stop loss very close to 18,400 or 350. But based on the overall statistics and based on the overall formation of large cap companies, I think we are going to cross the level of 18,600 very shortly.
Okay. All right. Srikanth, got that. Mitesh, run us through some picks then. Yesterday was a fantastic close. The problem is the broader markets are still not really performing. But there'll be plenty of stocks that are doing well. So run us through your list.
Well, Nigel, I think the mid-cap sector is not showing as much momentum as the large-cap space. But within the large-cap space, you will see most of the sectors, especially, IT, even oil and gas, started adding to the strength which was emanating from Bank Nifty, etc. So I think the large-cap space still looks healthy to me, and a very strong momentum can be seen over there. We have most of the calls from the large-cap space as of now. ONGC is a buy with a stop at 136 for targets of 145. HPCL is a buy with a stop at 217 for targets of 232. ICICI General Insurance, it closed around 1170 and 1175 is the breakout level. So buy about that, keep a stop at 1150. 1230 should be the first target. And on the weaker side is a couple of pharma names. We had a certain Cipla earlier. Loris Labs is a sell today with a stop at 456 for targets of 435.
Srikanth, what about you? What are your trades?
Yeah, Prashant, as the markets are very close to the previous high, we should look for adding some large cap company to the trading portfolio. We like HDFC Limited, which is currently around 2700, 2690 sort of levels. From here, the stock can easily move to the levels of 2800. So it's a buy at current levels with a stop loss at 2640 on the downside. The other stock which we like is Adani Enterprises, and there also we saw some reversal formation in yesterday's trading session. So based on the overall formation, I think the stock is heading for at least 4,100 in the near term. we can keep stop loss somewhere close to 3850. And from the pharma sector, we like Jubilant Ingrevia. There, the stock is forming some rounding bottom formation on long-term chart. So the stock was correcting since last 1 year, but currently it has broken almost all its important level. And in the short term, it has corrected to its important support area of 520, 530. So Prashant, it's a buy at current levels with a target at 570, 580. We can keep stop loss somewhere close to 520.
All right, gentlemen, we'll leave it there and come back to you a little later. Srikanth and Mitesh, appreciate both of you running us through your trading ideas. We are running up to market pre-open, 5 minutes away. We are back. We'll connect with Rajesh Sharma, Managing Director at Capri Global Capital, as Capri Global Holdings has bought around 19 lakh shares in Fino Payment. Stay tuned for that conversation coming right up.